Negative interest rate means you're being paid to go out and take out a loan. So people are going to keep doing that. Nothing is going to change. Inflation is going to keep getting worse. The Fed is actually pursuing an inflationary monetary policy under the guise of fighting inflation. Just because you're less loose than you were before doesn't mean you're tight. And of course, you're not even less loose because inflation is accelerating faster than the Fed is hiking rates. So rates in real terms are actually lower today than they were many, many months ago when the Fed first started contemplating the first quarter-point rate hike. I don't think they're accurately pricing it in yet. I think the markets are still delusional with respect to inflation. I think most analysts still expect that what we're seeing is transitory. They just think the transition is taking longer than they first thought. They still think the inflation is driven by supply chain bottlenecks or the war with Russia and Ukraine. And so they think that all this stuff is going to unclog and prices are going to magically stop rising. But that's not going to happen. I mean, the inflation is being caused by the government, by the Federal Reserve. And I see the budget deficits and the trade deficits getting bigger and bigger. And so the Federal Reserve is going to continue to create more inflation. And even though the Fed has raised interest rates, they're still at 0.25%. Inflation, even if you buy the government's version of inflation, that is 8%, how are you going to put out 8% inflation fire with a squirt gun of 0.25% interest rate? I mean, that's never worked. Interest rates are historically negative. I mean, Paul Volcker in 1980, to finally get rid of inflation, rates went to 20%. The highest inflation got in 1980 was 13.5%. So he had 6.5% real rates to bend the inflation curve. How are we going to bend that curve when we have negative 7.5% interest rates? There is no incentive to change your spending and borrowing and consumption patterns with a negative 7.5% rate. It's not like people are going to be incentivized to start saving now because they want to earn that negative 7.5%. Of course not. People aren't going to stop borrowing even though they're getting paid 7.5% to borrow. A negative interest rate means you're being paid to go out and take out a loan. So people are going to keep doing that. Nothing is going to change. Inflation is going to keep getting worse. The Fed is actually pursuing an inflationary monetary policy under the guise of fighting inflation. Just because you're less loose than you were before doesn't mean you're tight. And of course, you're not even less loose because inflation is accelerating faster than the Fed is hiking rates. So rates in real terms are actually lower today than they were many, many months ago when the Fed first started contemplating the first quarter-point rate hike.
That's right. Real rates are still negative. All right, so let's talk about Fed's policy. What can they do to fight inflation, assuming they even are interested in really fighting inflation? You tweeted this, and I'm just going to read one of your tweets from yesterday. You said Powell admitted price stability is so important to the long-term health of the labor market that the Fed may have to keep hiking interest rates to bring inflation down, even if unemployment rises. The same would apply to asset prices falling. This resolve will soon be tested. All right, what do you mean by that? Are you saying that it's either or, either the labor market or inflation? We can't have both?
Well, the economy that we have today, and I call it a bubble, it's a phony economy, it is completely dependent on artificially low interest rates, on all this credit-financed consumption and wealth that comes from inflated asset prices. So we've got this drugged up economy, and we need to remove the drug. Well, you can't do that without collapsing the economy. It's like, if you're high on drugs, is there any way that you could kick the habit and stay high? No. I mean, you stop taking the drugs, you're not going to be high anymore. You're going to go through withdrawal. So, yes, the Fed can fight inflation if it wants to, but if it fights inflation, it's going to have to collapse this bubble economy that was built on its cheap money, because you can't fight inflation with cheap money. You got to take the cheap money away. And interest rates have to rise dramatically, not just a little bit. they have to go way up. And the government has to really start shrinking the money supply, or the Federal Reserve. They have to start reversing quantitative easing. They can't just slowly allow their balance sheet to run down. And by the way, look at their latest numbers. The week just ended on Wednesday. The Fed added another $45 billion to the balance sheet. It set a new record high. They continue to monetize government debt. You can't do that if you want to fight inflation. That is creating additional inflation. So the only way that the Fed can truly fight inflation is to allow a massive recession, a complete collapse of this phony economy, and it's going to force the U.S. government to make some hard fiscal decisions that it's never made, because it's not going to be able to finance its deficits if the Fed is fighting inflation. So we're going to either have to have massive cuts in government spending, including entitlements like Social Security and Medicare. We're going to have massive increases in taxes on the middle class, not on the rich, on the middle class, working Americans, or some combination of that. Or the government might have to default on its treasury obligations. These are the things that the government's going to have to consider if the Fed were to actually fight inflation, which is why I don't believe the Fed. I don't think the Fed's going to fight inflation. In fact, if they were going to fight it, they would have already done it. We wouldn't still be at 25 basis points in interest rates. They wouldn't have finally raised interest rates on Wednesday if they were committed to fighting inflation. They would have done it a long time ago. They wouldn't have continued quantitative easing when it was obvious that we had an inflation problem. I mean, even after they admitted that they got it wrong and inflation was not transitory, they kept printing money. They kept monetizing debt. They kept interest rates at zero. So I don't care what the Fed says. I look at what the Fed does, and their actions speak a lot louder than their words. Okay,
you know what? Let's assume that the Fed is going to take your plan and say, we're going to really hike up rates to a level where a default may actually be necessary. I'm not saying they will, but let's just say that happens. What's going to happen to the stock markets? What's going to happen to gold in that scenario?
Well, the stock market's certainly going to crash. There's no question about that. The bond market's going to crash. The real estate market's going to crash, right? All of these assets that have been propped up by artificially low interest rates are going to collapse. Now, what happens to gold prices, it's hard to say. I mean, gold prices could go down in that scenario, but they would go down a lot less than stocks, bonds, and real estate. So people would still be better off in gold than owning these other assets. But personally, I think if we got to a situation where the U.S. government was defaulting on its debt, I think that would be very bullish for gold. I think people would be rushing out of dollars and out of U.S. treasuries, and they would be seeking out the safety of gold. So I think kind of gold's going to go up either way, but gold will go up a lot more if we don't do that. If instead we inflate our way out of it, if we never fight inflation because we don't want to deal with those consequences, if we keep on printing money and monetizing government debt, then gold prices are going to go up much more. I mean, maybe stock prices will go up in that environment too, but in real terms, they'll go down even more priced in gold than in the alternative scenario where we do the right thing and everything crashes.
Okay, let's touch on gold real quick. Just have one question about gold. You've mentioned that inflation has been rising for quite a while. Why is it that gold hasn't moved until actually relatively recently? In the last couple of months, it's moved up, but still it hasn't breached its August 2020 high. So what's going on there?
Well, first of all, you have to put everything in its context and kind of zoom out a little bit and look at the gold market, because in 2001, gold was under 300. So it went on a very big move from 2001 to 2011, from under 300 to almost 2,000. I mean, it got to over 1,900. And then we went on a substantial correction where gold dropped from 1,900 almost back to 1,000 by December of 2015. So that's when the market stopped falling. And that was coincidentally when the Fed hiked rates for the first time after having held them at zero for many years. And that actually marked the bottom in that correction. And so then gold gradually basically doubled in price over the years. And so it has been going up. It's just that everybody wants to compare it to its peak in 2011 and forgets where it came from 10 years earlier than that. But I think one of the reasons that we haven't seen a bigger move up in gold yet is because we've had a speculative mania in risk assets. I mean, I think 2021 really was the peak. If you look at what happened with the meme stocks, NFTs, cryptocurrencies, the popularity of all the crypto gurus, stock market gurus like Cathie Wood and her ARK Innovation ETFs and things like that. Investors really threw caution to the wind. They didn't care about fundamentals. They bought anything that was going up. Everybody was going to get rich speculating. That's not an environment where gold's going to shine. I mean, people weren't worried about anything. They didn't need a store of value or a safe haven. They didn't need an inflation hedge. They wanted to get rich quick. And that's not what gold is about. So I think in that environment, it doesn't surprise me that we didn't see a lot of interest in gold. But as the air is coming out of those bubbles, which I think is going to be happening, I think 2021 was the peak of crazy speculation. And as it starts to move from an environment of greed to an environment of fear, as reality rears its ugly head and people finally realize that inflation is here to stay. Because at first people said there's no inflation at all. Then they said, okay, we've got inflation, but it's transitory. And then they said, okay, it's not transitory, but don't worry, the Fed's going to quickly rein it in. Once they realized that that's a lie too, that the Fed is not going to reduce inflation, that inflation is here to stay and it's going to get worse, well, that's when you're really going to see people piling into gold.